Hello there everyone. So following on from my video last week on the demerger of GlaxoSmithKline Beecham, GSK, I wanted to do a video on demergers, but specifically related to SMEs, to small entrepreneurial owner-managed businesses and the tax implications of demergers. Now, there are actually 4 different ways under the tax code that you can effect a demerger. This particular one would be applicable, let's say, if you had 2 separate divisions of one company, 2 trades. Okay, so assume we have company A, which has trade A and B, so it's got 2 trades in one company, basically, and it's got the shareholders. And the shareholders haven't had a falling out or anything else like that. They're just thinking commercially, in order to run their business, to say, wouldn't it be great if we had a separate company for each of these divisions? Okay, so what they want to do is separate it out, have a separate management team in place, different staff, different people to run it, rather than it all be amalgamated into one limited company with 2 divisions. Okay, so they want to basically demerge trade B out of here into a separate company. So what are the tax ramifications of doing so? Well, what happens is that in the absence of any statutory provisions, when you transfer something to shareholders, that's called a distribution in the tax world. And in the absence of anything else, any specific reliefs, that's taxable as income tax. It's a bit like paying a dividend. If you're an owner manager, you're an entrepreneur, you have your own limited company, you're very familiar with paying yourself dividend, but you pay income tax when you receive the dividend. So when you demerge a trade into a new company, still got the existing shareholders, it's basically a dividend. It's like having a dividend to these shareholders. It's just a separate trade is being given to them in the guise of a new company. Now, generally, without any reliefs, that would be taxable as income tax, and we don't want that. So the demerger provisions in the UK say, look, what we're going to do is this. This dividend, in other words, the fact that they've got this trade set up in a new company, what's going to happen is we're going to convert that from being an income tax play to a capital gains tax play. So in other words, shares are issued to the shareholders, and that transaction is exempt. It's exempt from income tax, where otherwise it would have normally been subject to income tax, save for these demerger provisions. So that's the first thing. So set up a new company. The new company acquires the trade from the existing company. So now we've got 2 companies, same shareholders, but they've just got trade A and company A and trade B and company B. And that means there is no income tax on that distribution. But then also it turns it into a capital gains tax point, like I said. However, so even though capital gains tax is now in play and not income tax, then a further relief kicks in that says that even though capital gains tax is in play and not income tax, there is no capital gains tax to pay because of what we call a no gain loss situation, like it's called a rollover relief. In other words, what happens is that the shareholding of the new co by these existing shareholders stands in the shoes of the original shareholding. So in other words, the tax law says that, look, yes, technically this company, these shareholders have offloaded something of value to another company, but even though it's basically them that owns the new company, so that capital gain is rolled over into the cost of the shares of the new company. So that's how it works. So the relieving provisions say, look, any capital gain is just deferred. And at the point of setting this up, it's what we call a no gain, no loss transfer. So there's no income tax, there's no capital gains tax. Also, there's no exit charge. So looking at the tax in all different guises. So no income tax, no capital gains tax for the individuals, but for this company that distributes one of its 2 trades, no tax leakage here. Because normally if you were going to acquire a trade from a company, there'd be capital gains tax, there'd be a chargeable gain subject to corporation tax within the corporate wrapper. If a third party came and bought trade B, there'd be tax leakage at the corporate level. But with the demerger, again, no tax here, no exit charge. So there's no tax that the company has to pay, the fact that it's offloaded one of its divisions to a brand new company. There's no stamp duty. Now remember, stamp duty, we're not talking about SDLTs, no property. Stamp duty is a tax on documents when you transfer documents, setting up new companies, acquiring share capital of new companies. Normally it's 0.5% of the value of the company. Well, here, exempt from stamp duty. Also, everyone's favorite tax, VAT, no VAT. So there's no tax all around, basically, on what we call an indirect demerger. Like I said, it's one of the 4 types of demergers, and I'll do separate videos on each of them. But this one is called an indirect demerger, and basically, there's no tax. So, but I just thought I'd highlight what would happen in the fact that there wasn't this specific tax law written into the UK code to prevent there being tax. Because normally, like I said, on the starting point would be that there would be income tax on a distribution, but the law says if it's done right, no income tax, capital gains tax rolled over into the cost of the shares of the new company, and no VAT, no stamp duty, and no exit charge for this company. So, as you can imagine, with various things in the UK tax code, there are several hoops you have to go through. So this cannot be done for tax avoidance reasons. It's got to benefit the trade. Now, interesting enough to say, look, if this is done on the anticipation of a sale, so let's say someone comes along and buys this, you can't get the demerger relief. But actually, that doesn't matter because there's other ways to do it. If you did want to offload this trade here, another way to do it is just to drop in a new subsidiary and hide down the trade. And then if it's within a certain time limit of 12 months, you could then sell the new subsidiary tax-free. That's a separate thing called substantial shareholding exemption. I've done videos on that. But assuming that that isn't the case and you're not doing this because you want to offload one of the businesses, certainly not in the short term, you just want to have separate administration, 2 separate companies, then you go down this indirect demerger route, and you would also get clearances from HMRC. So you get your tax advisor to write to HMRC to spell out the plan, say, look, we're going to do this, maybe give them a schematic, and HMRC write back and they say, okay, great, you tick all the boxes, we're not going to hit you for income tax, capital gains tax, VAT, stamp duty, and the like. So that is just an overview there on indirect demergers. So commercially, you would do this one, like I said, if you've got 2 trades, separate divisions doing totally different things in one limited company, and you're looking to expand, you're not looking to sell one of the divisions, but you could do with having them really in 2 separate companies. You've got separate management teams, maybe separate geographical locations, whatever the reason, this is how you would do it. And like I say, it's only for trading companies. So what we tend to see a lot of is not necessarily trading companies, but people with property developments and how you split out property developments. But that is on a separate video because that is called a different type of demerger. It's not an indirect demerger. This one is just all about trading businesses. Forget property development, property investing, and how you partition property portfolios amongst 2 or more different shareholders. That's another video. But this is about demerger of trade. So hopefully you found that interesting. Like I said, following on the series of videos I'm going to do now on demergers and the tax implications thereof. But thankfully, on this one, like I said, if it's done right, no tax. So please, if you do like this video, remember to hit that subscribe button. And as always, I'll see you soon.